All right, we're back. Here we go. FundYourFX.com, partnered up with Bulletproof Traders, bringing you this exclusive Forex trade of the day and market overview. Today, we're going to be focusing on the US dollar, through the US dollar versus the Swiss franc, and we're going to talk about the pound versus the US dollar. The bottom line is the US dollar is back on the up and up, right? I mean, we've been bearish on the US dollar for a while, but we're going to be flipping over with our overview and our conviction. So we're going to be now shorting the pound versus the US dollar, and we're going to be shorting the Swiss franc versus the US dollar. Let's go right ahead, dive in. I want to start with the pound. It's been the pound versus the US dollar had been on the back foot for a couple of months now. And we noticed back in the day, 3 months ago, we noticed how it got rejection of the big resistance level of 34.02, and we saw the turnaround right off that key level. I mean, if you take a close look on the technical situation here, the pound versus the US dollar had been trading in a range ever since July 2023. So more than a year now. We've seen the pound ranging between the levels of 121 at the bottom to 134 at the top. And the most interesting part was the turnaround 2-3 months ago, because price action was trying to break out of 34, but it couldn't, right? So it got that rejection, started to turn around. And last month, we got a break below 28.81 right here. That was a trigger level for us, because that suggests that price action has more of that downside potential in the pipeline. In fact, it kind of suggests that price action is going to close the distance to the lower section, to where it came from when it was trading at the bottom of that range. So coming from the top of the range, now it's pretty much halfway through toward the bottom section of that range, right? So we decided that it's time to pull the trigger and activate a short position. The reason we took our time with this is because price action was in a technical correction, an upside technical correction, ever since the 22nd of November. And I think that's over, right? We've had almost a month of price action coming up and correcting the whole downside cycle that I just mentioned a minute ago. And it also did that in a classic fashion, Elliott's fashion, ABC, classic correction, where we had that upside push, that was the A, and then the B on the downside, and then all the way up, that's the C. So A, B, C, and now it starts to bend over, it starts to turn around. You can see we just pulled the trigger. This is really fresh. And we're going to be taking this to 123. So we're looking at a 400 pip of potential move. So there's a lot of meat on that bone. Setting up our stop loss level at let me make sure we get that number right. So it's 129.50 stop loss level. You can see we are having a healthy distance from price action, just in case it's going to get spiky, it's going to get noisy. We don't want to get caught unnecessarily. We don't want to get our stop loss triggered unnecessarily. So we're starting off with quite a distance as far as our stop loss level goes, and we'll start to trail our stop loss level accordingly, and we're gonna tighten up our stop loss level the minute we secure a downside reversal here. I mean, it looks like it's coming, it looks like it's happening right now as we speak. Nevertheless, we need a couple more days to make sure price action is really turning around and starting and resuming the original downside trend that started back in late September, right, when price action was coming from 134 and some change back in the day. So yeah, there you go. And you know what? The negative momentum seems to picking up the pace right now as we speak. So that really is, our Forex trade of the day is the pound dollar that was just activated short position. But also I wanted to mention the situation with the dollar Swiss franc, because we were bearish on this pair up just last week, and I talked about the break below 88.22. That was our trigger to get into short position, and we did well at the beginning, and we have even managed to take some profit off the table at the very lowest low. But then price action turned around and started to slide back above 88.22. That was not a good sign for us. The minute it closed that daily bar yesterday above 88.22, we ran for the exit, right? We didn't even wait for price action to engage with our stop loss level. The cross back above 88.22 suggested that there is really a breakout coming our way and not a downside reversal. So we had to correct quickly, and that's pretty much what trading is all about, right? There's always new information coming in, new pieces of data. We have to reassess, reanalyze, and take action. Take immediate action to reflect the new information that's coming in. So price action, even though was kind of suggesting it's going to have a full-fledged downside reversal, that's not the case. We're looking at the monthly chart here, and from the monthly perspective, and we've talked about that before as well, price action has been trading inside of that range back and forth ever since July 2023. So more than a year now, trading sideways, right? Now it's coming from the bottom. Now we thought initially that short-term perspective we're going to have a bit of a downside reversal, but now you can see price action is breaking out. And we talked about the 88.22 level that was able to push against price action successfully last month, where it was pulling back hard, leaving that little spike here suggesting a potential downside reversal. But now we can see it's adamant breaking out that area and closing the distance to the upper section of the range. I mean, like I said, it's more than a year now. It's been trading back and forth inside of that range, coming from the bottom. It's literally halfway through right now. So we strongly believe, and since like I said at the beginning, the US dollar is back on the up and up, and we saw that in the pound versus the US dollar situation that we just engage with the short position. So from a correlation standpoint, that definitely fits the narrative. US dollar is on the up and up, and it's not coming off. It's going to get stronger. So I feel like price action has a lot of potential to close the distance to the previous high. All right, the previous high coming from 92.20, just early May. That was quite some time ago, but I think it's going to close the distance to that area. So the previous highs, but also I want to mention the big key level resistance of 90.80, 0.9080. That is our official profit target for this particular bullish campaign. Now we started off relatively small, just one trade in, but if price action is going to remain, is gonna keep that positive momentum going, then of course we'll get more aggressive as we go. We got a long way to go still. 90.80, it's about 200 pip to go, right? So if everything looks well and price action keeps advancing forward, we're gonna double up, and later down the road potentially even triple up, as we're closing the distance to the target final destination 90.80. Last thing I want to mention is our stop loss level for this new bullish campaign on the dollar Swiss franc. Stop loss level is at 87.40, and that's all there is to it. All the analysis here on the US dollar, Swiss franc, and pound versus the US dollar on the silver platter, sharing our in-house trading activities in real time. Guys, hope you enjoyed that video. We're wishing you a nice trading day. We're going to be back tomorrow as usual. So till then, be well.